Hello everyone, it's Pierre here from PAFX. Today I'm going to share with you a recording about market structure. This recording is taken from one of the course session I have. I hope you like it, guys, and if you really do, please hit the like button. That makes me feel very good to keep sharing free videos like this. See you there. Today we're gonna talk about the market structure, my favorite thing. We're gonna talk about trend lines and we're gonna talk about Fibonacci tools. So this session gonna be a long one, so we're gonna try to make it as compact as possible without missing any important information. So please, when I ask something, be fast to answer me so we get a good flow in this, yeah? Very good. So, market structure and what is market structure, guys? As you surely know for now, the main thing that makes the price moves and give us a structure that we look at is supply and demand, yeah? Sellers and buyers. We need both of them if the price gonna move up or down or a little bit sideways. So those are a very, very important component to price movement. Those movements make the whole structure that we used to look at and give you a trending market or ranging market. So we look at structure, we want to know, is it a trending market I am in, I'm gonna trade, or is it a sideways market or a ranging market that used to looks like a box? And that's very, very important for every trader to, it's the most important thing in my opinion, to understand what's going on with this market I am looking at. Otherwise, you will never be able to have a good action plan ready for your trading, yeah? And as I said before, your first goal as a trader is to know what market structure you are looking at, trending market, up or down trend, or if it is a sideways market. When there is more supply, the price falls, of course. Everyone wants to sell, and there is a lot of orders, selling orders. Then everyone start to lower the price so they can sell. Or when there is more demand, the price goes up because everyone wants to buy it, and when it's you can think like you are in a market, and in this market they only sell iPhones. You start in the start of the road in this market, and the first guy that's selling iPhones for, let's say, $100, he sold out. You move to the next one. The next one he sells for 110. When he sold out, you're gonna move to the next one. So you can think about that in the same way, yeah? You have to move forward to get what you want. And those moves are what we traders want to trade and hopefully make some money. Those are what make us trade and makes a plan and look at the chart and thinks that we all do, that when price reaches this level, I think it's gonna reverse or it's gonna keep going higher or lower, yeah? So how to read that? Let us go and look at some example, and we're gonna, of course, go for live charts also. So bullish market structure, you have the first one to the left, the green one. When the market is making higher highs and higher lows, as you see here. this one was initial low, then price went high and gave us our initial high. Okay, then it did correct down and gave us initial higher low. Then price breaks above the initial high and gave us another higher high and kept going higher low, higher high, higher low. Looking at it like we do now, it looks very, very easy because we are looking at one impulse only. Things may get a little bit difficult when you start to looking at multi-time frames and a market that goes up for a while and then start to goes down, and that was make it a little bit confusing. But if you're a swing trader, you only need to worry about which impulse is going on now, which is this trend. My trading time frame is the 4 hour. What trend in that 4 hour? I did my daily analysis. I see that price did reach, let's say, major support and reversed it and broke that neckline. And I want to start looking at higher highs and higher lows on my trading time frame. So that's make it a little bit easier to you to understand what's going on with this particular leg or this particular move. Yeah. The next one in the middle, it's the opposite, where price start going down, making a lower low here, pull back up, give us a lower high and another lower low and another lower high. That's what we also want to look at when we want to short any market. You want to see at least one or two lower lows and two lower highs that give you, confirms to you that the trend is going now. Only one low or only one lower high is not enough. So you want to see, if we're looking at a reversal market, let's say that we're looking at this market right here in this area, we were going up and we got the reversal. You want to see this lower high and you want to see this lower low. This lower low is not enough to you to start selling the market. So when you have a couple of lower lows and a couple of lower highs, you're gonna get much more confirmation about that the trend is probably much safer now to short this market. Yeah, of course, there is lots of aggressive entries that you may do at the first pullback, at the retest, but in that case we are talking about one shorting trade. We are not talking about that this market is now trending to the downside. Yeah, we have possibilities. We're gonna take those opportunities too when a market break a neckline like we have on the screen right now and do the retest, give us a rejection. Of course, we can enter that trade somewhere in this area if we got the right price action we are looking at. But we can't say at that level, at this level, that this market is trending to the downside yet. But when it goes and break this low here, then we can start talking about a trending market. Yeah, and the sideways market, it looks like something like that. You got one higher high, then it goes back down and make one lower low, then it goes back up. It don't give you a higher high, but it maybe don't give you a lower low either. But in this picture here, we have a lower low. So a typical sideways market looks like something like this one to the right, and that market is a little bit hard to trade for a beginner, I would say. You need to have some good skills how to trade those. And of course, the best way to trade such a market, as I always say, you sell the highs and buy the lows if you have a clear box that the price is ranging in, yeah? Are we clear on this, guys, or do you have any questions before we go to a live chart and try to look at this too? Very good. Let's see. I have to share another screen with you. So let's move the chat. Do you see the chart now, guys? Good. Everyone sees it. Very good. Well, we have a fresh, good example here on sterling JPY. We're gonna keep working with this chart even on the trend lines and on the Fibonacci session too. But looking at this market, we have this initial move from this market was trending higher with not so much pullbacks as you see here. The pullbacks was not so big. It is a bit hard traded market because you have to make your buys in this market without deep pullbacks. You see, when I make those higher highs and higher lows, they are very, very, very shallow pullbacks, yeah? But then when the market did form the stop, it was a perfect reversal top. Looking at it now, it makes this high here, pull back a little bit, give us this nice shooting star, a last case, and we start trending down, yeah? So what happened first here when we're looking at structure and talking about structure? If we look to the left here, looking at this candle here, and you compare this candle that broke this neckline to the red bearish candle we had in the past, there is none as big as this one. So you have this top, you have your shooting star that you usually wait for, you have some other stars here, and you have this break of the neckline with such momentum, and show you that some big money did enter this market. Just by looking at the size of this candle should make you start thinking what's going on here. We never saw as big candle as this one in, I don't know how many candles I have to count back to find something like this, but we can go back 66 bars and there is none as big as this one, even more. Okay, so this was our first clue. We now did a break of this low here, So the structure is now a swing low, lower than this low. We have a little bit of correction to the upside, a lower high, another lower low, a little bit of higher high, and then the market did break this low, did a retest, and kept making higher highs and lower highs and lower lows. Yeah, equal high, another lower low. So as said before, after one lower low, we can't talk about trending market. We have this example here. After this lower low, we couldn't say that we had a trending market, because as you see here, the price did break those lows one more time as a last try to go higher. It's very clear here that we did break higher close than this one, not a higher close than the high of the candle, but a higher close than the bodies. Yeah. But then when you got this rejection and price did break this low here, this is the major low, because as you see the other lows, this low is not major low, but this low is the major low in this case. In this box, this is our major low. And then we got also a break of this major low, a retest of it, and continuation. We had some, we could say we had some sideways market. One more time, that is how price moves. It gives you an impulse, up or down, some consolidation. If it's gonna continue down, it's gonna give you another impulse, some consolidation, and another impulse to the downside. I think in this picture here, you see the whole market structure, how price moves. Yeah, this one was our first impulse, consolidation. Then we got another impulse to the downside, consolidation, and another impulse, and it just kept going down until where we are right now. Yeah, we're still making, this is our major low, another lower high, minor low, minor lower high, major low, because it did break this major low, it did break both those lows here, correction, another lower high, another low that break two lows here now. It gave us this double bottom, and now we did just make our first major higher high in this trend, and possibly our first higher major higher low too. And then this trade that we 2618 trade that we had here, that Trung Lee did make some money on, fast in, fast out. We didn't get, the fund didn't last very much, but it was a very, very good move. But why I'm saying that, because we didn't get our second higher high yet. Yeah, so this here now is our first higher high, higher than this high here. Yeah, and this low here is higher than this low. So we have our two higher lows now. We want one more higher high to start thinking about a trending market. Yeah, so if you do always look at the price movement like we did now. And I do highly recommend you guys to put some times on your charting skills, put some times on drawing these highs and lows. Just take your tool here and just draw them on the screen to train your eyes to see those things. You don't need to draw this low, because if you compare this low and this low, this one and this one are the measures one, yeah? And this low is our last major low. Those one here are not as big movement as we had before. Looking at this move, this is a strong move. Those moves are just some consolidation, some noise. So you can, when you have this and this engulfing and the price start going up, then you can only always draw it like this to this major low. Now you have your major low. You want to see this low broken for more to the downside. It got broken, then traded higher and got rejected very, very strongly with this huge candle that needed to break this low here, yeah? So always look at the size of the candle that break the lows. They used to be, or the highs, they used to be much bigger than when they are break a major high or a major low. Take a look at those two candles here that did break this low, sorry, this high here. You see how big they are. If you look left, the candles before them wasn't as big at all. And this candle here that we got yesterday, no matter what, if it was a speech or news or whatever did make this candle, this tells you there is strength in the bulls at this level. No one can deny that, even though we got this correction now to the downside, but we do actually have a higher low now, because we have one candle, two candles higher than this one, and another two candles. So this gives you a fractal that that means this is a confirmed higher low now. So guys, if you do train your eyes on this, make those lines. That's gonna make your price action trading much, much easier, because you know at this level now, when you got your first impulse, this correction or flag, when you got this one here, this flag that got broken, gave you another impulse and another lower low. Now you know, you sit and wait. You want to see a break of this low, yeah? In this case, you had the break of the low with this candle. Now you are very, very sure that you are in a trending market, and you wait for your opportunity, which you got at this level here, at the retest. Almost every time a price breaks new lows or new highs, it almost always do a retest of those levels, yeah? And if we had an entry reason on the 1 hour, let's go and check that. We didn't have a clear entry reason on the touch, but you had your entry reason when price did break this neckline, those two candles, and you see the move we got after that break of the neckline with this spinning top-ish candle. Okay. So let's go back to the 4 hour. Does it make sense, guys? Are we clear about how to read the structure, how to see the higher highs and higher lows, and how to start your thinking machine, yeah? Or do you have any questions? Good. If you feel confused and you're not sure about what market structure you're looking at, you can always use your moving average to give you some hints of what's going on. Let's put this one is the 20 moving average. It wasn't respected a lot, as you see, but if we put let's put the 50, the red one is the 50. In this market condition, the 50 looks to work good, as you see here. When this whole time, the price never touched the 50. And when we got our reversal here, you see we got this touch, rejection. It usually happen when price have been in a trend like this, never touched a trend line, and it came and touched it. It usually gives you a bounce from that trend line. Then the trend line got broken, and since then it kept being respected, as you see here, 3 times, acted as dynamic resistant, another fake out, and then price start to trade below it. Another, here we have another test. Here price struggled for 5, 6 4-hour candles, and this week we had the break, and then now this trend line is not looking at here, this slope, this trend line is not as steep as before, and now it looks more like sideways market, and that was said today in the room. Stay away of such market conditions. These last candles here, and only new higher low, but no new higher high, no new lower low. This is right now is a sideways market. So trend lines used to be also a good help to make you see what market structure, are we trending or not. And another one thing, just open your chart. We are trading the 4-hour. We want to know what's going on. Just look left, in this case up, to right, down. And in this case, this is a clear downtrend market. And now we have a possible reversal, or at least sideways market at the moment, yeah? In this picture here, we have also a downtrending market, not as steep as the one before, but we have our impulses. Impulse. We have the correction of this impulse that used to be sideways. Another impulse, and lots of sideways. This is when you see the trend line is in the middle of the price action. This here, the trend line was respected. You see here, in a ranging market at such a trend line like this one is useful, useless for you, because the price is not respecting the trend line, and you can't count on using that as your dynamic support and resistance, yeah? But then looking at this box here, you see that if you wanted to scalp this market, let's put the box somewhere like this one. If you're a scalper, this box should give you lots of good opportunities, as you see here. If you wanted to sell the highs and buy the lows of it, then price did break the box here, traded below, gave you another lower low, and then spike up for a last try to break the box. It couldn't do that. We got only one higher high, and that's another problem in a trading arranging market. As you see here, in this case here, you're thinking maybe that this market gonna start to head down. It gonna just give me a correction up, and it keep going down. But you didn't have this down move yet. You had this break, a try to break those high, never made that, and then it start trending down. And look now what's happened. When you have this really good downtrend, then our moving average start acting as dynamic resistance once again. Yeah, so that's another way to try to find in what market conditions you are at. Those are very, very hard to trade, but short term, if we look at this, you had a short-term uptrend clear here with higher highs and higher lows until up here. And then price went back down. We didn't break this low yet. We did make the last kiss, which always give you the head and shoulder scenario. Shoulder, head, shoulder, and then the price did break the neckline, did a retest, and gave you another lower low and kept heading down. Yeah. So moving average can be helpful to you if you are a bit confused of what's going on in this market condition. You can also use the 200 or the 100. Try in every market condition, you will find one of them that is respected and you can start using it. Yeah. In this case, you see when price did break the 200 moving average here. Look at this here, respected many times. The 200 and the 4 hour usually work good, depends on the pair and the market condition, but you can see how many times it was respected here until we got this break of the 200, and it was a very strong momentum. So price was very long away from the 200. That's why you need, in this scenario here, you need to put maybe the 20 moving average, as you see here. The 200 was useless because the trend was very strong. The 50 was also a little bit useless because we never did a pullback to it. And now when we try the 20 moving average, you see that in this strong momentum, you needed to use the 20 if you want to enter at the pullbacks to the 20, or possibly the 10 also should do it well in this, only in this strong market move to the upside. Yeah. But if we look back to the 200, this one here, you see it got respected here, then got broken, retested, price went back down, still no break of it. Here we have another retest and price start heading down from the 200 moving average. So for next week, guys, here you have your trading idea. Yeah. What we want to see: a break of the 200, retest, and the continuation up if you want to go long on this one. Send me the donation after you got your trading entry and take profits. Just kidding. Are we clear on market structure, guys, and how to read it? Of course, of course. When we continue going this course, we're gonna talk much more, but these are the basic things, yeah? So give me a yes, please, if we can go and start talking about trend lines. I think Fibonacci is the last. Very good.